After recently passing a Payment Services Act, which is in line with the recommendations of the Financial Action Task Force, MAS is likely to continue its regulatory efforts. Further, it is expected to introduce stricter technology risk management and AML/CFT standards for financial institutions. All of this will require cryptocurrency businesses to adapt to the new regulatory environment. As of the moment, the country is not implementing any specific cryptocurrency regulation. However, it has taken an accommodating approach to the regulatory process. It has issued a press release warning the public of the risks associated with cryptocurrency speculation, and Deputy Prime Minister Tharman Shanmugaratnam has stated that cryptocurrencies are subject to the same AML/CFT measures as traditional fiat currencies. Similarly, the Payment Services Act 2019 brings cryptocurrency businesses under the regulatory authority of the MAS, which will. The MAS is not alone in following suit. While the European Commission has not yet issued significant cryptocurrency regulation, the Mexican government recently published a fintech law that will regulate financial technology institutions. As a result, the country's government has a significant incentive to follow suit and ensure that all companies operating in Mexico abide by its regulations. In addition, Chile has a draft legislation for cryptocurrency exchanges that will extend the AML laws to crypto services. Until recently, innovation programs in Mexico did not have a corresponding regulatory sandbox. These programs gave innovators short-term licenses to develop their business models without any legal or regulatory certainty. But the regulatory sandbox is changing all that. It now gives innovators more legal certainty and helps them to develop their ideas with fewer legal obstacles. And with the regulatory sandbox, Mexico can encourage the growth of new technologies. Financial law in Mexico has its roots in civil and Roman law. Nevertheless, it is codified and attempts to cover all legal consequences. The Mexican regulatory sandbox is a legal framework designed to foster new and innovative business models. These models may include blockchain technology, fintech institutions, and novel ways of providing financial services. The objective is to encourage sustainable innovation in the financial industry. Therefore, the regulatory sandbox has a number of perks for fintech companies, including more flexible obligations. The regulatory sandbox is now available in Spain. To participate in it, developers must submit an application form on the website of the Secretary-General of the Treasury. While the application form is available in English, it is processed in Spanish. The application must be accompanied by a report detailing the project's added value and innovation. A full application package must contain all the necessary documentation. Once approved, the project can move forward. In a statement published on its website, the Mexican Securities and Exchange Commission, MAS, said that its regulations regarding crypto-related businesses are in line with those in other jurisdictions. As part of its mandate to protect consumers, the MAS has adopted a set of regulations on the secondary regulation of virtual assets. These regulations, known as regulatory sandboxes, establish a regulatory framework for the new business models. While the MAS bans cryptocurrency exchanges, other countries have not followed suit. Other countries in Latin America have expressed concern over the impact of cryptocurrencies on the financial stability of their countries and the money laundering risks posed by them. The government of Mexico has not yet announced any major regulations on cryptocurrency, but it is making a significant effort to ensure the safety of the financial system. MAS's ban on ICOs and exchanges reflects these concerns. The MAS has made a strong effort to protect the interests of investors while regulating the industry. This is a step in the right direction. For now, the Mexican financial system still does not accept cryptocurrencies. However, the MAS has a number of additional regulations that will make it easier for companies to operate in the country. Among them are stricter AML/CFT standards for cryptocurrency service providers, and higher technology risk management requirements for financial institutions. In addition to the recent efforts by the MAS, its crypto industry is also gaining international attention, and the recent crackdown in China has caused a number of high-profile Chinese service providers to relocate to Singapore. A joint statement from the Central Bank of Mexico and the Secretariat of Finance and Public Credit, MAS, has reaffirmed MAS's previous ban on Bitcoin and other virtual currencies. The government's APOP aims to prevent illicit goods from entering the country and prohibit the use of any form of virtual currency. The Mexican government's ban on Bitcoin and other cryptocurrencies is a significant development. The move to ban Bitcoin could actually benefit the US because most Bitcoin miners are located here. While some experts fear that China will challenge Bitcoin's dominance in the world, it's important to remember that Bitcoin is catching on everywhere. El Salvador, Nigeria, and Mexico became the first countries in the world to adopt it as legal tender. Other countries in Asia, the Middle East, and Latin America have adopted stablecoin payments. The Mexican regulator, the MAS, has banned 2 crypto exchanges in the country. While this may seem counterintuitive, the MAS has recognized that cryptocurrency exchanges have significant financial implications and could gear the country towards stricter regulation. Meanwhile, Mexico's Chamber of Deputies has approved a bill to regulate cryptocurrency exchanges. This law bans financial institutions from issuing or transferring virtual assets to their customers, but the exchanges can still use these assets for internal operations. However, the regulations are a far cry from banning cryptocurrencies, especially in a country with limited understanding and experience of crypto. In a statement to the press, the MAS stressed that the MAS's decision to ban exchanges is not a direct threat to the financial system of Mexico. The agency emphasized that cryptocurrencies are subject to the same AML/CFT requirements as traditional fiat currencies, including the use of exchanges. The agency also warned that cryptocurrency exchanges must comply with its regulations, which can be costly and time-consuming. It is also likely to drive many new crypto startups out of business in Mexico. The Bank of Mexico's September 2018 circular emphasized that financial institutions must be licensed to conduct operations with virtual assets. As long as they do so, the regulator will impose sanctions on those whose businesses use virtual assets. While the ban may slow down the growth of the crypto exchanges in Mexico, the central bank's goal is to protect the interests of users and the right to access new technologies. If these regulations are implemented, however, it will only delay the launch of new exchanges. Banco Azteca, a bank owned by Mexican business magnate Ricardo Salinas Pliego, has been riding the digital swell in Mexico for almost 2 decades. However, its plans to accept cryptocurrency put it at odds with the central bank, and it lost the fight with the other local banks. The MAS's decision to ban payment companies in Mexico is a blow to the industry in Mexico. In Mexico, payments made through bank transfers make up only 16% of online transactions. This is projected to grow slightly until 2021, though the rise of smartphone usage will be much greater. In addition, the use of bank transfers will likely depend on banks' willingness to innovate better solutions for low-income consumers. Without such a widespread acceptance, they may eventually fall by the wayside. But the impact on the Mexican economy is already clear. The country's low cash-out rate makes it one of the least cashless countries in the world.